Hello, everyone. Welcome, welcome. We'll get started. Welcome, everyone. Charity, welcome, welcome, Charity. We'll get started shortly. Shortly. This evening we're going to go over stocks, options. Yes, stocks, options. Hey Mary, welcome, welcome. Yes,
Hey David.
hello.
It's me, Mary.
Welcome, welcome. We'll get started shortly. Welcome, welcome, Daniel.
What's up, Dave?
All right, go ahead. Guys, we'll get started shortly. Just a few more minutes, we'll get started. Hey, Bill. Welcome, Bill. We'll get started shortly, guys. This evening, we're going to go over stocks, options, and ETFs. Stocks, options, and ETFs. Hope you guys are taking advantage of the move in the dollar, of the action in the dollar pairs. let's go ahead and get started here. All right, let me share my trading screen. All right. All right, so you guys should see my screen here, my trading screen, monster market tracker. All right, let me. All right, okay. The big news is that we're still in seller's territory. I know the market made a move higher today. But if you guys look at the charts, we do not have any buy signals. All right, so no buy signals on the Dow, the S&P, and the NASDAQ. All right, so no buy signals currently on the Dow. All right, the S&P, NASDAQ, and the Russell. We do have sell short signals. All right, sell short signals on the NASDAQ. And then we have sell short signals on the Russell. All right, so we want to be extremely careful trading stocks. Hey, Kawisi, welcome. All right, so here is this is a big area that we're watching. All right, this is on the NASDAQ, and we are watching this support level right here. It's on the daily time frame. All right, and guys, ask me any questions. Okay, so as I go through this, you can stop me, ask me any questions. Here is support right here on the NASDAQ. Here is our sell short signal, this red arrow right here that came in yesterday. All right, so we did have an update today, but I'm still in the markdown phase here. So we want to be very, very careful with stocks. All right, and we'll take a look at our Heatseeker. All right, so sell short signal on the NASDAQ, same thing with the Russell. All right, right here. Here is support right here on the Russell. Right here, here is support, right? Broke support, pull back today, but still holding sell short signal right here. All right, so need to be very careful. The VIX pull back a bit. All right, the VIX pull back a bit. And I know this is, we have to go through this every time, okay? Because, you know, stocks will follow these indexes. All right, so we need to know where they are. This is the VIX, right? So the VIX volatility index, and as you guys know, as the VIX move higher, so as the VIX moves higher up, right, volatility increases, and that the market moves lower. All right, so the VIX has to be lower below 20. All right, and in the low teens for the markets to move higher. So right now, the VIX is at 29, right at 30, let's say. It made a high all the way up here to about 33. All right, so I would consider that still very high. All green candles. All right, so bullish. If we put let's see if we put let's see here. Let's add a study to this. One second there. All right, so we do not have a buy signal yet. All right, but definitely moving higher. Definitely moving higher. All right, as far as the sectors, so let's take a look at the sectors. All right. So if you guys look at the sectors here, guys, all these sectors are down. All right, so the indexes are down right here. The indexes are down, all moving lower. The VIX is moving higher. All right, we're gonna have 3 sectors that are moving higher. All right, so that's real estate. And I don't trust this. Utilities and consumer staples. So utilities and consumer staples are usually a safe haven, all right, for traders to go to, all right. But if you guys look here, right, even energy that's been moving higher, it's now neutral, all right. So be very, very careful, very, very careful. Here is energy right here, precious metal. So just be careful, just be careful. We're going to pull back quite a bit with trading equities, okay? And we'll talk about this evening, right? Just because there isn't a lot of opportunities in equities doesn't mean that all the markets have dried up, okay? So we'll talk about rotating, right? What markets to go into, all right? That's gonna be critical. So as traders, we don't wanna just focus on one particular market. We're gonna take a look at all the markets and then just move fluidly from one market to the next, okay? That's gonna be critical as we move forward, all right, with your trading. As far as Heatseeker, as you guys know, with Heatseeker for Stock Boss, we track stocks that are under $10, all right, down to penny stocks, right, in Heatseeker. Usually Heatseeker with Stock Boss, we'll have much more opportunities, a lot of opportunities. But as you can see here, we only have about 7 stocks, guys. So out of about 22,000 stocks that we track daily, right? We only have about 7 right here. And what that tells us is that these stocks are not moving higher, all right? I mean, I could go through these stocks here, but this is perhaps the only good one that I see, ATER, all right? This one is setting up here, ESPR, but again, I would be very careful. All right, we have a few more opportunities in Bullmaster. All right, so we have some energy. Now, Bullmaster, these are stocks that are $10 and higher, $10 and higher, all the way up to about $5,000. All right, but we have some energy opportunities in here, but these energy stocks have moved up quite a bit. So these energy stocks have moved up quite a bit. So we need the selling, we really need selling to come in, all right, push these markets lower. So we can get some really good opportunities cheap, all right. So usually we'll have about 2 to 3 pages of opportunities in Heatseeker for Bullmaster, okay, so that's all we've got right now. Think of Heatseeker as a protection mechanism for us, all right? When we have, when the market becomes bearish, guess what? It dries up, forces us not to trade. Okay, so it's designed to force us not to trade because we really shouldn't be trading long up in this kind of market here. Okay, so just remember, as the market gets bullish, we'll get more opportunities. As it becomes more bearish, we'll get fewer opportunities, forcing us not to trade. All right. We did see some opportunities, some short opportunities in monster ETFs yesterday. So we had short tech and short Qs, the QQQ. All right. I don't see that here now. When the Heatseeker ran today, because the market moved up higher today. But we'll go over this as the market, if the market continues to become bearish, we'll see short opportunities, okay? And short ETFs works like this, guys. So let's say, for instance, let's see here, short yen. All right, so here's the short yen. So as the yen, you guys know here, here's the yen moving lower, right? This is in the futures market. The yen is moving lower here, all right? But we can trade the ETF, the short, ultra short yen that actually goes up, all right? So we can trade that long. So just remember, here is small caps, ultra short small caps, okay? And as the small cap stocks go lower, guess what? We've got a buy signal and we can trade that up, okay? So we don't always have to short. We don't have to always short the stocks or get puts, all right? The short ETFs, we can trade them long up as the sector or that particular instrument goes to the downside, all right? Biotech is going lower, all right? So as the biotech sector goes lower, right, here is ultra short NASDAQ biotech that's moving up, all right? So we're not there yet. Things are picking up in Monster ETF. Oh, hey, Gerald, welcome. Things are picking up in Monster ETF, okay? So as the market, if it continues, we're near a big support for the indexes. So if they break that support, we'll start to see a lot more opportunities here in the ETFs. So, so look for that. Any questions on this? Any questions on any of this? Any questions on anything at all? Any symbols you guys want to take a look at? Any trades that you guys want to take a look at?
The question I had, Dave, is what I asked you earlier about, like, if there's like a recession, is the market still good enough to trade, or is it not tradable, or how does it work?
Okay. So when we talk about a recession, right, usually the markets will go down, all right? So it's always, things are always changing. So we've got to be flexible, you know, we're thinking, however, there is usually what happens is this, right? So we'll see the market go down, the VIX push higher. Now, understand that if there's a recession, and I've been through a few of those, I'm a bit older, right? Many things happen, and it doesn't just happen all of a sudden, right? A recession will last a long time, okay? Now, understand that usually the markets will come down, right? So equity markets will come down, all right? Usually Daniel will get big moves in Forex, okay? So the way it works right now, the way it's been working for a while is that when the equity markets, so the stock markets are bullish, right? A lot of money, a lot of capital tend to go to the equity markets, all right? Fewer money go to, so you'll have less money, less capital, move it into Forex, okay? And you guys have probably seen that a bit, right? When the equity markets, they've been bullish, things are moving up, right? Forex will dry up, right? We'll have most of these pairs here in a consolidation, right? All the way up here will be red, right? Or most of these pairs will be consolidating under 20, okay? There is a correlation. So there is a correlation with Forex and the equity market. So think of this: if the equity markets are drying up, they're moving to the downside, right? They're in that markdown phase, we'll start to see a lot of opportunities in Forex, a lot in the currencies, okay? Just like we're doing now, okay? When the thing we want to take a look at is that we want to be flexible, and this is why we are in different markets, okay? So if there is a recession and the markets are crashing, the equity markets are crashing, we'll see moves, okay, kind of like this here. We'll see moves in other places, okay? So whether it's the futures market, right? Okay, whether it is the dollar, like the dollar here, okay, the dollar is breaking out, moving higher. So the thing is, Daniel, it's hard to say exactly what will happen, but you just have to look out for other opportunities, okay? There is a big correlation with the yen pairs. So if the I know for certain that when the market, whatever direction the market goes, especially if it sells off, we'll see that happen in the yen pairs. Okay, so the yen pairs really likes to follow the equity markets, the Dow and so forth. Okay, but it changes. It changes. It's more difficult. It's more difficult to make money in a recession, okay, because prices move down faster. Okay, so when the markets, let me see here. Okay, so let's see here. I don't know if this would be a good example. What happens when markets become bearish? They can be more difficult to trade if you're not quick. All right. Let's see. Does that help a little?
Yeah.
Mm-hmm. All right. Let me find. So let's see. Because what happens if you guys are quick? Yes, you can. Puts are very hard. Shorting is very hard when the equity markets go down. That's why the ETFs, the short ETFs are good, and that's where the big institutions usually go. They don't like to short, right, or get puts, so they'll usually go to the ETFs. Okay. Some of the, like we look here, some of the safe haven stocks. Let's go here, like utilities, right? You'll see some utilities come up, but we're not there yet. We're not there yet. The point is, though, we have to be nimble, right? Nimble and be flexible. We can't be tied to any particular market. The one nice thing, Daniel, for day traders usually do really well. All right, so day traders usually do really, really well because when the markets go down, in a recession, you've got a lot more volatility. Things are bouncing around like this. You're gonna get wild swings. All right. Wow. Yeah, so that's the one advantage. So if you're quick, you're trading on a smaller time frame. You will get trends. A lot of the trends that you will get during times like that will come through the futures market, and sometimes the currency markets. Okay, let's see. I want to see pound yen. So here is 2008. This is what I wanted to show you guys here. Any questions on this? Any questions? All right, I want to show you guys why it's difficult to trade. Okay, so we've got more data here. All right, so let me bring it a bit more. And Daniel, I'm glad you're thinking that way, because yeah, we could be in a recession soon. So it's good to get ready.
Yeah, I want to prepare my mentality and not think that the world is going upside down.
Yeah. So if you guys look here, this was the dot-com crash of 2000, 2001, the dot-com crash. This is pound yen we're taking a look at. And I want to show you guys how quickly the price drops, okay, compared to how slowly it goes up. All right, so there was a big drop. This is on a monthly time frame here. All right. And here, see how slowly the price went up. So after the dot-com crash from 2001 to about 2000, what's that, 8, right? So this was one crash, the dot-com, okay? And here I was barely trading, but I was in the markets. Here was the big one. So most of you guys, either you've been through it or you know about it, right? The big housing crash of 2008. Okay, so look at how quickly the pound yen went down. All right, so look at this. It is candles right here. These are monthly time frames. Okay, so 1, 2, 3, 4, 5, 6, 7, 8, 9 months, right? That completely collapsed compared to when it went up, right? Took several years, right? Took several years to go up, but took only a few months to really crash. So this is hard to trade. Okay, very, very hard to trade. But if you trade a smaller time frame, all right, even if the 240 might be able to catch some of this here, but nice volatility, nice movement. Okay, so if we can anticipate what's coming, get ready, change hats, switch our hats, right, from long to short, and get ready like you're thinking, then you can capture some of this. Okay, but it happens quickly. Okay, so it happens quickly. So if you're on the right side, you know what you're doing, right? Yeah, you can do really, really well, really, really quick. Okay, so and that's the pound yen. Here it is, 2012, right? Right, markdown phase, accumulation, markup phase, and then here we are right now. Okay, so just keep in mind that things will move quickly, all right, as volatility increases. So that's the big thing, just be nimble. All right, the Dow, right, as the Dow is going down, as the yen, right here, the yen, I know we're talking stocks, right, but this is important, right? There is a correlation with the yen and the dollar. So as the yen is going down, we're seeing big moves in the dollar. All right, so Daniel and everyone, just be, when we trade these markets, that's why we've got different systems for different markets. Okay, so we can switch from one market to the next, one system to the next. So our traders that are trading stock boss right now, even sniper, all right, bull master, there just isn't a lot of opportunity right now, right? No, at some point that will change. Go ahead,
David,
Bill.
when you said when the yen is down, the dollar is up, and vice versa, does it normally run like that, or is it just the way it is right now?
The way it is right now. Sometimes, yeah, there is a correlation like that, but it can change. They can run together, you know.
Okay.
Yeah, they can run together. The idea is, what we want to do is, yes, we want to kind of somewhat predict, but we also always want to go with the price. All right, we always want to go with what the price is doing.
Right.
Okay. So I think, and Daniel, I got your message today, and I thought that was an interesting question. What happens? I think we send out a blog on what happens during war. All right, but what happens during recessions is probably a good one. I would say the best thing to do all right, is really get your skills up. Okay, because there will be volatility, there'll be big swings in the market, crazy swings, right? I mean, we could see the Dow one day up, you know, up 1,000 points, next day down, you know, 1,500 points. They're big crazy swings because there is a lot of panic in the markets. Okay, so I getting your skill. There's a lot of money to be made in the markets like that. Okay, just think about. But a lot of times you have to be patient. Okay, a lot of times you have to be patient. I remember 2000, right around 2012. Let's see here. Let me bring in the Dow. I remember 2000. Let's see if I can. Let me bring in the time frame. Any questions, guys? Why I do this? I bring this up. Any other questions? All right. Okay, I remember 2000, right in here, 2010, 2000, yeah, 2010, 2011, after the crash, right? 2008 crash, stocks were really cheap, right? So there was a ton of opportunities. Our Heatseeker went nuts. I remember just lots and lots of opportunities. So, so when these markets kind of fall down like this, kind of like this one here, right? Go through that markdown phase. And that's what we want. We want this market, right? The Dow, the NASDAQ, all up. We want them to go through that markdown phase and get cheap, so we can jump in. Okay, but as traders, we don't care, right? We'll try to trade whatever we can. All right. All right, but good question, Daniel. Good question. Just be nimble. Look to trade different markets. Don't force it. All right. Anyone in the I know Travis is in USD CNH. That is it's the third biggest dollar pair that's trending up. Anyone else in the dollar pairs? Anyone else trading the dollar pairs? No one else. No one else in the dollar pairs. Bill, you're not in the dollar?
No, I've been traveling for almost a week. I just got home a day and a half ago, so I exited everything before I travel. I got to jump back in now.
Yeah. Big moves, guys, in the dollar, and it looks like very proud of Travis. He's not on the call today, but he got in right here at that buy signal, guys. Right here on that buy signal, and overnight it broke resistance again, reaccumulation, and moving higher. All right, just an amazing trade, just an amazing trade here. And this could continue to move higher because we got that buy signal right here. Okay, I can actually move this right here. All right, so we've got a buy signal monthly time frame. All right, on the dollar. Okay, on the dollar. All right, so we could see this might be this move right here. All right, this move right here, right? like he got in here, he's still in. This move right here could be an early move if the dollar, and this is a big move already. You guys can see that that's a big move already. So if the dollar continues to move higher, this is on the monthly time frame, right? This will continue to move higher. And a lot of the dollar pairs, USD, DKK right here. All right, dollar ZAR. Dollar ZAR is the #1 trending pair right now at 70. So look at that buy signal right here. It's all the way up here. Okay, so so the dollar pairs, right? If you're not in any of the dollar pairs, you could look for opportunities on the 30-minute time frame. Okay. I'm watching pound yen here, pound yen. All right. This is a good little trade here on pound yen on the 30-minute. All right, a good little trade, but the dollar is where we need to be. But watch the yen pairs. Okay, watch the yen pairs. We are starting to see they pull back a bit, but we are starting to see buying coming in. Okay, we're starting to see buying coming in the yen pairs. Okay. All right, so nice pullback. We got a nice pullback. All right, nice pullback. And we should see some buying coming in. So nice pullbacks right here, nice pullback. All right, we need a buy signal, kind of like here, pullback. All right, and we're looking at pound yen right here. Remember, pound yen broke that, right? Broke that resistance. We have a buy signal here on the monthly, right? It pulled back a bit. So this should be a big move. So the two areas we want to focus on as far as Forex, there isn't a lot to talk about with equities, quite honestly. There isn't much there, all right? So our focus right now needs to be Forex, all right, until things improve in equities, all right? So our focus really need to be in Forex, the yen pairs, pound yen in particular, and then the dollar pairs. Okay, the dollar pairs. All right. When the yen moves lower, right? The yen, this is the yen, the Japanese yen in the futures market. So when it moves lower like this, the pairs, the yen pairs over here, all right, tend to move up. Okay, they'll tend to move up, and right now the dollar is moving up too with that. So. All right, so a lot of opportunities over, I would say right now, about 90% of all of the pairs, all of the Forex pairs we track are trending, breaking out or trending. Okay, if you guys look here, look at that, 79 is huge. That's a big number there for ZAR. So this is where, you know, if you guys want to know where the money is going, what's being purchased right here, currencies. All right, futures, not a lot in the futures market, right? Not a lot in the futures market. The big deal is the dollar. You guys will start hearing on the news, they'll start talking about the dollar. The dollar right now is at 103.67. Okay, so you guys go on CNBC. No, I don't listen to CNBC, but when things get crazy, I'll go and listen to it for entertainment. All right, but you'll start, as this dollar moves higher, you guys will start hearing out there, right, about the dollar moving higher. But guess what? We'll already be in our positions. All right, in here. All right, so by the time it comes out on the news, we want to be, you know, before it happens, we want to be in positions. But this is going to be a big deal, right? You guys will hear about the dollar, big moves in the dollar as the dollar keeps moving higher. This is 1 month here. This candle right here is this month. And that's a big move. That's a big candle right here. Big right here. right? This candle right here, very different from these candles right here, right? That's 1 month worth of buying. That's a big push, right? The price went from 98.36 to 103.64, and that's a big move in the dollar. And we got a buy signal right here on the monthly time frame. So that's a big deal. All right, that's a big deal. The last time we got a buy signal was right here. That was 2004, end of 2014. So end of 2014 going into 2015 was the last buy signal on the break of resistance right here. And look what happened. That's a big push. All right, so the dollar went from 84 all the way to a high of right here, 102. This was a big push right here. So this is another buy signal. We haven't had a buy signal on the monthly time frame since end of 2014. And so here we are again with another buy signal. And let's see, take a look at a trend line here. Nice upward trend right here. So we're looking for the dollar to break out. Okay, so like I said, this could be an early move right here in the dollar pair. So I wish more of you guys were in these pairs, in the dollar pairs. Okay, if you've missed it, you might find some opportunities to trade it on the 30 or 60-minute time frame. All right. Okay. Any questions for me? Anything? Any symbols you guys want to take a look at? Any symbols at all? No symbols. Sniper trades. This we've been, if you guys notice, we've been the trades we haven't had a good week. So this we closed out all of the trades. Those trades will be small in ranking, so you need to take small positions. You might want to take probably, rather than all 3 trades, probably just 1 trade right now. Okay, that's the
gold
market.
looks like it's been going down this week. Is that because inversely the dollar's gotten stronger?
You know, gold has been stuck. We'll take a look at it. It's been, you know, gold is a big surprise, right? I mean, you would think that gold would be way above, you know, that what 2000 mark. All right.
Yeah, now it's below 1900.
Yeah. I mean, gold has been a big disappointment with everything that's gone on, right? You would think gold would have really made a move. Silver is the same way, right?
Right.
I mean, they made a move after COVID, right? But you know, gold is, you know, if a lot of the older investors will hold gold, but you know, a lot of the newer traders, they're not doing anything they're not looking to push gold, right? They're looking to get into Bitcoin, and so we don't have a lot of action, but you never know. I mean, it is a safe haven though.
Well, I was surprised last Friday to see us take a long position on Barrick Gold.
Who did?
Sniper trader.
Oh, okay, yeah, but that's quick. That's just a quick move, right? That's just a quick move.
Well, I was hoping.
Yeah, that's just a quick. And yeah, I mean, you would think, understand, and we don't talk about this a lot, right? But understand that when the markets become bearish, right, usually everything goes down. Yeah, it's hard to find. It's hard to find. That's why, you know, the other markets are good, but anything that's related to the equity markets will kind of go down. All right. So if you look here, so the market's down right now. We know the market's down, right? It's really testing support, wants to continue that markdown phase is what we see currently. And if you notice, everything is down. Look at precious metals right here, right? So gold, silver, right? Palladium, platinum, right? They're neutral to the downside. Okay, bonds, look at bonds, right? They're down, right? The only thing really that's barely holding is energy, right? And at some point, if the market really corrects and go lower, this will all be red, right? This will all be red pointing down, because what investors do is they'll just get out, right? They don't care what they're holding. It doesn't matter. The fundamentals doesn't matter anymore. Okay, so Daniel, when you talk about the recession, right? They don't care. Once they, I think, who was it? Peter had mentioned Facebook, and we were looking at Facebook the other day, and you know, I don't pay attention to these individual stocks, right? But he was looking at Facebook, and we looked at a monthly time frame, and it was crazy, right? Let's see here. Bring up. So here is Facebook here at the high, and we'll end with this. At the high here, Facebook was at $378. $378. Okay, it made a low. It made a low the other day of 167. So think about that, right? So earlier, this was, let's see, when was it? Last year. So last year, right? This was what? August, September, October of last year. It made a high of 377. And then last week, it made a low, or earlier this week, it made a low of 167. That's a big move down. All right. So all those traders, all those investors, right? Really investors, right? That have been in Facebook, right? Now it's moved up a bit, right? So it closed today at 204. But they're panicking, and if they continue to get squeezed, they'll dump more shares, right? They'll dump more stocks.
Dave, can you pull up the RSI on that?
Oh, that's a good. All right, RSI. So yeah, look at the RSI, right? So it's been screaming oversold, right? I mean, overbought, right? Overbought. But yeah, when the price, and this is why we do this, right? So we don't get squeezed, right? So as these traders get squeezed, I mean, just think the people that bought up in this area right here, they're not happy, right? And if it goes lower, right, they're gonna get out, but look how quickly. So from so here, let's put the price here, right here. So from this move here to this move here, right? Look how long it took, right? Look how many months it took to get up to here. And then look how many months it took to get back down here. It moves really fast, right? Look at this big candle here. That's a lot of selling coming in. All right. So But the way we want to think is this: we want them to sell off. We actually want it to crash. And I know it's a bad way to think, right? But you know, as traders, we don't care, right? Here is Facebook, and we were talking about this. Right here is when it opened up, new IPO around $35. Boy, wouldn't it be nice? Wouldn't it be nice for Facebook to get back down in this area in here? All right, and just buy it all up. Because you know, Facebook isn't going anywhere, right? It's not going anywhere, right? But wouldn't it be nice, right? For you know, for the price to calm down, keep calming down, right? We know sellers are in control right here. All right, overbought. It's not in oversold territory. So could you imagine it gets in oversold territory, right? And that price gets below 100. It's not far from that. It's not far from that. And that's how you make really good money. Yeah, so this was this week. This was this week, right? It came all the way down to 168 right here. All right, this is pretty good support right here. So that's the way you want to be thinking. With a recession, Daniel, think of, you know, start building capital, start getting ready, right? Start getting ready, right? Get your debts and stuff in order, start building capital and all of that to get ready to buy cheap, right? To buy low. All right. So yeah, when you have recessions, just think of recessions as deflation. And I know everyone is talking about inflation right now, but there's deflation, meaning that assets are deleveraging, right? They're getting cheaper. And we can see it here in Facebook. It's gotten a lot cheaper. It's a lot cheaper here than it was up here, right? If the price comes down lower, it's going to be a lot cheaper down in here than it is out here, giving us opportunities to get in at a much cheaper price. All right, and that's how you do really, really well. But it's got to go through that phase, go through that markdown phase. All right. I know it's big. That's big thinking. That's big, broad thinking. All right. But there are traders right now. There are traders right now and investors that are hoping that Facebook just completely, you know, crashes. And then they're gonna buy in at wherever it stops. All right. So where the retail investors, retail traders bought in this area here, right? Don't know what's going on, and they're hoping that the price moves higher. Guess what? Sellers are in, right? And the savvy traders, the savvy investors are holding. They're not in up in this area, right? They're waiting patiently, right? Bill, you said RSI, right? For that RSI to become oversold, and they'll start buying up cheap. All right. So,
Gonna buy the dip.
well, they don't buy the dip, right? The buying the dip could get you in trouble. Buying the dip is basically this. This is the dip. So it's not done yet, right? This is the dip. What we want is we want it to fall, right? Go through that markdown phase, right? Find a base, right? That accumulation, break resistance, and then go higher. That dip, right? That dip could go lower. All right. So this dip here, then you have a lower dip. So the dip is not buying the dip. We have to wait. All right. The dip is part of all that. That dip is part of that markdown phase. Okay. So it's not buying the dip. All right. So here, let's see here. I want to find a good example.
So when I hear somebody buying the dip, I think of somebody buying in the consolidation phase.
No, they usually mean buying when it goes lower. So it's like a falling knife. We don't want to do that. We want to, let me bring this up here. And we'll end with this, I promise. Okay. I'm glad we're going over this because this is big thinking, right? So here's the 4 market phases, okay? Buying the dip would be kind of buying. So Bill and everyone kind of buying as it's going down in here. That's the markdown phase. So buying the dip means, hey, it's going lower. That's dip, right? The dip, it's going lower. You're going to just buy it. You're just going to randomly buy it as it goes lower, right? But it could go lower, right? It went lower here. It went lower here. It went lower. All of that is the dip, right? We want it to stop falling. We want it to stop falling. That's why I brought in this chart here. So you guys, if you don't have it, have this. All right. Take a print shot of it or picture of it. All right. So we wanted to go through that markdown phase. So Facebook is about up in this area here, right? So it's not ready. It doesn't even have a new support and resistance yet. No, I know we're looking at a long time frame, the monthly time frame, but it's still, it doesn't have a support and resistance like this yet. It's still falling. That's the dip. So anyone who buys now, guess what? That's not trading because it could go lower. We've got to wait until it bottoms out, right? Stop, find support. It's got to find support, all right? Accumulate or consolidate, all right? And then we need buyers to come in, break up resistance, and now take it up again. So if you look at Facebook, right, it went from about $35 to $377, right? Up in here, that distribution phase. Now it's coming back down, right? It got a sell signal. It's about right in here, right in here. Okay, we don't have any support and resistance. Once we have support and resistance come in, now we've got levels that we can watch, right? Break resistance, we've got buyers coming in, we can now buy. If it breaks that support, we've got new sellers coming in, we've got to let it go lower. Anyone that buys in that area, that's the dip. They're buying the dip. It's a falling knife. It's a falling knife. Okay, so we've got to wait, let that markdown phase finish, let price find support, get over resistance, break of resistance, then we can take the price higher. Okay, so if we look here at Facebook, take a look, let's take a look at the chart here on Facebook. All right, so Facebook is right here. All right, so here's the markup phase. Okay, now we're in the markdown phase. All right, we need to find support over here. All right, this is a long way to go. Yeah, on the monthly time frame, it's a long way to go. Let's take a look at the weekly time frame. On the weekly time frame, look at that, guys. Look at that. Look at that. Okay, so markup phase, distribution, markdown phase. Let's bring in some sell short signals. So here's your sell short signal right here on this break of support right here. Look here, that's a falling knife. Okay, that's buying the dip. Anyone who buys in here would be buying the dip. All right, we need new support and resistance lines. We need the price to hold, find support. All right, accumulate, all right, consolidate, and then new buyers to come in. If not, guess what? It's going to continue that markdown phase, redistribution, and go lower. All right, but this is an area to start watching it. This is an area to start watching it. It's oversold. right here. This over here was the last time we found support. Right, so over here was the last time we found support here, found support here. So Bill, you're right, but not too early, Yeah, never want to buy the dip. We never want to buy the dip. We never want to buy the dip. All right. Any questions for me? I think that's all I've got. I will see you guys on Sunday. I don't believe we have a class tomorrow. I will see you guys on Sunday, okay? Start thinking big. Good job. Good job. Start thinking big. Start planning for these trades and pay attention to the 4 market phases. All right. Take care, guys. Have a good weekend. Take care. Bye-bye.
Thanks, David.
Bye-bye.